welcome again to my show, Searching for Integrity. My name really is John Smith, and I'm searching for people with integrity. Why? Because our country suffers from IDD, integrity deficit disorder. We have today yours truly, which is me, bringing you some tidbits of the business world, the economy, federal government, what Biden has done or not has done. Nevertheless, a lot of these are going to be playing out in the not only the near future, but in the overall future, probably no later than this summer. And I'm going to give you an idea of what people are reacting to when, I guess it begins. The new CBO forecast shows the deep fiscal hole Democrats have dug. White House spinners are boasting that Joe Biden's presidency has been historic, and in one sense, they're right. In a mere 2 years, he has midwifed the biggest expansion of government since the 1960s. That's the real news in Wednesday's annual budget, and economic forecasts from the Congressional Budget Office, and the bill for this blowout has only begun to come due. This CBO forecast is more significant than most because it's the first comprehensive account of what the last 2 years of Democratic Party control have wrought. It's also for enough past the pandemic that it offers a guide to all of new spending and tax increases will affect the federal fisc for a decade. You don't have to be an alarmist to see that the trend is setting the U.S. up sooner or later for fateful reckoning. Looking at a table here, columns, the nearby table shows for Biden revenue and outlay numbers exceed the U.S. historical norm. Revenues last year hit 19.6% of GDP, far above the 17.4% average over the last 50 years. And a share of the economy reached out only to 1944 and 45 and 2000. The overall federal tax burden is higher than ever, and the American taxpayer is paying more than his fair share. That includes you and me and all the others. Now, look at the spending side of the ledger. Outlays reached 25% of GDP last year, far above the 21% 50-year average. Under current law, that spending burden will continue with some modest annual changes, more or less through 2033. If you're a socialist, you want politicians to control more of the means of production. That man is Joe Biden. The federal spending mix is also notable. Defense spending as a share of GDP fell to 3% last year, far below 4.3 average. It barely grows for a decade under current law. The only time in history that the U.S. depending fell this low was in 1940 and 1998 to 2001. No bonus points for noticing these lows came on the eve of World War II and before the 9/11 attacks. Those defense troughs didn't last. Meanwhile, so-called mandatory spending for entitlements, those are Social Security, Medicare, and more, hit a new peak of 16.3% of GDP last year. far above the 10.9% average. That will fall slightly as pandemic programs end, but it will accelerate again later in this decade as more of the baby boomers retire. And don't forget interest in the federal debt, which is rising fast again as the Federal Reserve raises interest rates to normal levels. CBO estimates that interest payments will gobble up 3.6% of GDP in a decade, which is based on optimistic assumptions that inflation and rates. Annual budget deficits will climb as a share of the economy from 5.2% of GDP in 2022 to 6.9% in 2033, when annual red ink will hit 2.7 trillion in a single year. As for the much discussed federal debt, the nearby chart shows how fast it has grown in the last several years. Debt held by the public, the kind we have to back creditors, like the Chinese and Japanese based on contracts, is now 90% of the economy and will soon rise to 100% and keep going to 118.2% in 2033. How high can it go before creditors stop lending? No one knows, but it will be ugly if they do. Most of the media will ignore all this because they figure it plays into the hands of Republicans who want to use their debt limit as leverage to gain spending concessions from Mr. Biden. But these are all facts that the public deserves to know. The White House will soon release Mr. Biden's budget, which will try to prettify all this up so it doesn't look so spendthrift. CBO's numbers are a useful reality check. None of this is fiscal destiny, and we aren't deficit doomsayers. Much depends on whether Congress can constrain the growth of spending now that Republicans control the House. The other key variable is in economic growth, and on that score, the CBO estimates aren't hopeful. It predicts little growth this year and a rebound only to 2.4% a year from 20 to 24, 2027. Growth falls to an anemic 1.8% after that. Bottom line is that President and the Democrats have built a much larger federal government that is taking nearly a quarter of all national income, up from about a fifth over the last 50 years. Mr. Biden has also raised taxes, though not nearly enough to pay for all the new spending. He now wants to even higher taxes, which he claims will reduce the deficit. That would really fund even more new spending. All of this backs the argument made by Republicans to restrain spending growth in everything except national defense. They will have to use this leverage carefully and with more unity and political savvy than they have shown so far. They do have fiscal reality on their side for whatever that is still worth. Who knows what the effect on that? That just doesn't sit well with all of you. Here's another follow-up to this one, the one I just informed you about. Biden GOP draw opposing lessons from prior debt limit standoff. After 2011's near default, Democrats reject tying budget negotiations to debt ceiling talks, while Republicans say that is the only way. During the final throes of negotiations to avoid a government default in 2011, then Vice President Joe Biden and President Barack Obama received late-night updates in the Oval Office on a compromise to break a legislative logjam as they monitored the Asian markets for reactions to signs that the U.S. couldn't pay its bills. I can't not tell you how terrifying that was, said Jack Lew, who was the director of the Officer of the Magic Budget and the Time, recalling how he and others finally hammered out a budget deal with Republicans that led to spending cuts in exchange for raising the debt ceiling. I don't think I've worked on a domestic policy issue where there was an imminent a sense of potential catastrophe, said Mr. Lew, who later served as Treasury Secretary. With the country facing another debt ceiling deadline this summer, 2011 showdown has become instructive, but Democrats and Republicans say they took sharply different lessons from it. Now, President Biden's team points to the near default as a reason they say they won't entertain negotiations tied to the debt ceiling again, with Mr. Biden reiterating this week that he wants a clean increase with no conditions attached. Republicans say that the resolution of the 2011 standoff underscores how the debt ceiling is in an obvious place for the GOP to exert leverage this time around to force spending cuts to narrow the federal deficit. While they haven't laid out a plan, Republicans say Social Security and Medicare are off the table, but are expected to seek deep spending reductions elsewhere. Debt limit debates have been used for nearly every successful attempt to reform federal spending in living history, said House Speaker Kevin McCarthy in a recent speech. Why? Because the problem only gets solved when both parties come to the table. The country bumped up against its $31.4 trillion borrowing limit in mid-January, prompting the Treasury Department to start using extraordinary measures to pay America's bills. The measures could be exhausted as soon as July. The Congressional Budget Office estimated Wednesday, setting a rough deadline for the White House and the new Republican-controlled House to grapple with the issue. Debt limit debates have been used for nearly every successful attempt to reform federal spending in any living history. Most economists say that he would be catastrophic for the economy if Mr. Biden and Congress failed to lift the debt ceiling in time, causing the U.S. to default on debt payments and other obligations such as government paychecks and Social Security benefits. There's going to have to be a deal, said Greg Valliere, the chief U.S. policy strategist as AGF Investments. Unfortunately, the catalyst could be a very volatile financial market if we don't have a deal. Now, this volatile financial market, if we don't have a deal, that's probably a fact in the near future. That's my thoughts. Mr. Biden views the current circumstances as more dangerous than in 2011. A White House official said the official that Republicans haven't made clear what they will want in the talks. Mr. Biden has said he is open to what he calls separate talks about deficit reduction. During his State of the Union address, Mr. Biden said his budget to be released next month will erase $2 trillion in deficits, taxes by raising in the next decade, without reducing Social Security or Medicare benefits or raising taxes on those making less than $400,000 a year. He hasn't provided more details, but in speeches has floated the idea of raising additional money from higher income Americans and businesses. Mr. Biden and Mr. McCarthy met recently in the White House, described as a frank and straightforward dialogue. And Mr. McCarthy called a good conversation. Democrats insist that they aren't negotiating on the debt ceiling, while Republicans say the two lanes are part of the same discussion. The two plans to continue. Speaker McCarthy looks forward to his next discussion with the president on lifting the debt ceiling in a responsible way. And in a statement, Mr. Biden told reporters Tuesday, I suggest that instead of making threats about the debt ceiling, we should be catastrophic. Which would be catastrophic? That's just the way things gets along. Biden, let's just lay out our budgets. Republicans plan to release their own budget by mid-April. Congressional Democrats recognize that the debt ceiling bill gives Republicans their strongest form of leverage to win spending cuts. That is causing some Democratic caucus members to worry that Mr. Biden won't hold firm on his pledge to not negotiate on the debt ceiling. Of course, that is a major concern about whether Mr. Biden would give away too much in negotiations. He will be doing everything that we can really advocate at the White House to hold the line. Republicans see it differently. The president knows that he himself has a history of negotiating in connection with the debt ceiling. Senate Minority Leader Mitch McConnell said on Fox News earlier this month. So I think that the speaker is asking him to do is not unreasonable and certainly within precedent. In the 2011 discussions, Mr. Biden led bipartisan talks on debt ceiling increase and paved the way for lifting the borrowing limit by 2.4 million trillion, paired with 17 billion in federal spending cuts in a new committee tasked with further deficit reductions. The passage was a nail-biter. The GOP-led House repeatedly had to pull a debt ceiling bill off the floor because of a lack of Republican votes. As markets sank, Treasury officials debated steps such as giving priority to which bills to pay. And even if the deal was signed, after the deal was signed, debt rating service Standard & Poor's downgraded long-term, debt for the first time in 7 decades. We both learned the lessons from 2011, which is the United States has to pay its bills on time. And we don't negotiate over whether or not we maintain our full faith and credit. Who was part of the group led by Mr. Biden. Some Democrats and left-leaning economists decry the 2011 deal, saying the spending cuts slowed the economy's recovery from the 2007-2009 recession. We both learned the lessons from 2011. Hitting the debt ceiling is terrible, and making a deal that hamstrings our economy is also terrible. This time around, some lawmakers view the distinction in the White House in making between the two sets of talks as merely semantic, believing the discussions around spending cuts and the debt ceiling will inevitably merge. Senator Joe Manchin has indicated he is open to attaching spending cuts to a debt ceiling increase. We have to negotiate, Mr. Manchin said in the January interview with CNN, where he also called the White House policy of not negotiating with Republicans a mistake. I'm glad conversations are happening between the White House and Speaker McCarthy during a recent event, but they need to move more quickly, because the closer we approach a possible default, the more damage to our local economy. Democrats have also used the borrowing limit for leverage. During the Republican administration of former President Donald Trump, Democrats used debt ceiling negotiations in 2017 as part of a push for more domestic spending. When pressed on the 2017 talks, Senate Majority Leader Chuck Schumer defended the Democrats' record. In one instance, do we do a budget proposal along the debt ceiling proper? Yes, but there was no brinkmanship, he told ABC. Republicans have narrow House majority. Mr. McCarthy, who only wanted leadership after 15 rounds of votes, they required concessions to far-right members to keeping moderate Democrats close. He has already met with Manchin and seen the earlier this month dining out with Kristen Sinema, who caucuses with the Democrats, and hasn't said whether she believes there should be negotiations over the debt ceiling. She's a friend, Mr. McCarthy said in a brief interview. For many members of Congress, the lessons of 2011 aren't as visceral as they are for Republican and Democratic leaders. Roughly 3/4 of current House lawmakers were in office during the 2011 debt ceiling fight. And just 53 members of the 222-member House Republican majority were in office during those negotiations. Well, I guess they need to make some changes in order to be able to move forward. It's not easy. It's not easy. It's not going to be easy. I don't think so. What is pushing the national debt to its limit? The pending need to raise the debt ceiling is renewing debate over federal taxes and spending. U.S. debt held by the public as a share of gross domestic product. The U.S. national debt has increased by more than $8 trillion since January 2020, pushing the total debt over $31 trillion. According to the Treasury Department, extraordinary measures to keep paying the government's bills could run out before July. According to new figures from the Congressional Budget Office released Wednesday, when the federal government spending exceeds revenue, creating a budget deficit, the U.S. covers the gap by selling securities such as Treasury bonds. The national debt is the accumulation of all past deficits plus the interest owed and all the resulting debt. Measuring the debt as share of gross domestic product allows for comparing the level of debt over time relative to the size of the U.S. economy and for comparisons with other countries' debt to GDP ratios. The federal debt held by the public, not including intergovernmental holdings, reached 99.8% of GDP. That's also being maxed in 2020, the result of a multi-trillion-dollar fiscal response to the coronavirus pandemic and a sharp drop in economic output. Economic downturns often expand the deficit on two fronts. The government spends more on social programs and financial stabilization, and cooling economy lowers tax revenue, even if the rates haven't changed. Opportunities to trim costs are limited, with only 1/3 of federal spending labeled as discretionary, requiring congressional approval through annual appropriations bills. The rest is mandatory spending and includes entitlements such as Medicare, Medicaid, and Social Security. Social Security was projected to account for 22% of spending in 2023, and together with Medicare would make up 38% of spending. The Social Security figure is expected to grow to 24% in 2028 as an aging population pushes up the cost of both programs. National defense accounts for 13% of spending in 2023 and is the largest non-entitlement program. The CBO also expects that the net interest will account for 13% of spending by 2028, up from 10% in 2023. Well, this is an analysis, a numerical analysis of the various things that they can do or can't do, but a lot of it is just can't be done. They can't do what they want to do, and all it's going to do is just run it up. I think when you're going to see all the debt and the possibility that the U.S. is in no way to meet that, and you got to stop spending. You got to stop spending. You got to stop spending, and then nobody listens to that, especially if you're in Congress. Nevertheless, I've enjoyed this reading. And it is one of you should tell others and discuss it and see what can be done if something reveals itself in the near future. I want to say hello, listeners, how to find you. And yes, I like you. Thank you. And thank you, listeners, for tuning in to Searching for Integrity. So long and happy trails to all.